going to be the state for NBFCs. So let's try and understand all of that. We have Shweta Daptardar joining in, Vice President at Elara Securities for their Financial Services Division. Shweta, hi, morning. Great to have you today on ET Now. Shweta, help us construct what the current ambience is for NBFCs, both the good as well as the bad.
Hi, morning. So as you rightly pointed out, we are approaching a rate down cycle. But at the same time, we have to be cognizant of few things. One is post the Fed meet, it's very clear that RBI will also join suit next year, which the market is pricing in, and hence the euphoria. But like I said, we ought to be cognizant of a couple of things, like we are still in a high interest rate environment in terms of cost of funds spike, which is clearly visible even today for NBFCs. And the reason being, so look, MPC decision comes with a lag impact on the financial services sector. So the 250 bips spike of interest rates or repo rates still will have slight bearing on net interest margins for whole of FY24. It's only in FY25 that we'll be seeing positive impact on net interest margins owing to beginning of rate cycle. Point number two, NBFCs had also raised borrowings at higher interest rates, which are still coming for repricing on the higher side as on today. So again, that will have another bearing on net interest margins for this year. On the positive side, what we have seen is the growth runway remains very strong. So we remain positive on few subsectors such as one, power financiers, wherein the capex cycle, the government impetus on renewables remain very strong. We are also entering a positive infra cycle, which will have positive bearing for these financiers. Two, microfinanciers are again on a strong growth runway. So another 1.5 years, you will continue to see microfinanciers doing strong. The RBI regulations have been supportive with removal of cap on net interest margins. Third, we are positive on gold financiers. So primarily, we preempted this a few months ago with the new RBI norms coming on increased risk weightages for banks to NBFC lending. So in such a scenario where risk weightages are going higher, where unsecured retail credit is being clamped down, then definitely this will have positive impact on gold financiers. And with the gold rally underway, I think this is the third sector you should be looking at for next 1 year.
In your understanding, how much of the NBFC book right now has unsecured as a category? Because that's where a big slowdown is likely to happen.
Right. So actually, see, the larger part of the problem is more into less than 50,000 rupees ticket segment, wherein the data is not reported. So it's very difficult to gauge as to how much pain is there in the system. The reason that RBI came up with a cautionary note is primarily because of the aggression that has happened on the lending side across financiers. So last 1 year, if you see, the retail unsecured credit has grown by 30% year on year basis as at the end of FY23. We have also seen certain spikes in portfolio risk for consumer credit for credit card portfolios. So the data and the aggression is suggesting there might be delinquencies that is coming through. But as on today, the kind of interactions we are having with the management of NBFCs, at least for today, there is no such immediate sign of worrisome. But yes, when the cycle turns down, we have to remain selective and stay alert as to the build-up of this risk on the portfolio.
What is the right way to look at the price to book of NBFCs? You know, there is a Manappuram Finance sub 1-time book. There is a Bajaj Finance 8-time, 10-time books, depending on the estimates you look at. What is the right price to book for the NBFC sector?
Yeah, that's a very interesting question. See, typically for NBFCs, the good keeps getting better. And unlike other sectors, NBFCs valuations are, even though they might look optically expensive, they continue to remain there if the underlying quality of the management and the growth story remains intact. So largely the valuations for NBFCs are outcome of growth, sustainable growth, structural story, and definitely the quality of the management. Pointing out specifically on the gold financiers, yes, we have seen a huge valuation gap there, but I think this should also eventually narrow down. Most of the NBFCs are now, as we know, are doing operating systems re-engineering. They are focusing more on rebuilding of systems on the digital and technology side. There are diversified books that are coming to surface, which will help in customer retention strategies. A lot of competitive intensities are flaring up, especially from the bank side, as now data is easily available. So I think NBFC bull run should continue, but at the same time, we would like to remain selective because the risk built up, on the other hand, is something which we cannot ignore.
When the entire rural economy is under stress, why is microfinance doing well? Why is every microfinance company or so-called microfinance bank coming out and saying that we have no problems, there are no NPAs, we don't know why rural economy is slowing down, hamari book to achhi hai. How can that happen?
Yeah, so two things here. One is rural economy. If we talk about rural economy, it's more about agrarian economy. So farmer incomes or cash flows on the rural side are definitely have definitely remained tight. If we talk about specifically for microfinanciers, we have to get one thing clear. Microfinanciers do not give loans for crops. They are not direct. So the microfinance customers are not directly farm income based customers. These are small entrepreneurs, mom and pop stores, say cateries, businesses, so the and the likes. So microfinance growth story, like I mentioned in the beginning as well, remains strong at least for next 1.5 years. But you're right to an extent, the customer vulnerability there remains strong as we have not seen very positive signals on the rural side. So we always advise clients on microfinance side that you should leave something on the table and exit strategy should remain in place. But as of now, microfinance, as you rightly pointed out, especially on the margins from the margins perspective, because there is removal of cap on net interest margins by the RBI and nothing as such, no reversal of such decision is coming through. So which has kept these set of companies in limelight.
One set, Shweta, and the other one are the power financiers, the fancy of the market right now. I mean, look at what's happened with the PFC, REC, or for that matter, and IREDA, the kind of re-rating that the entire sector has got, more so after this recent listing. Tell me, how do you think this entire story is placed vis-a-vis the kind of valuations that these stocks are quoting at?
Right. So power financiers have been the talk of the town, and primarily because power today is a very structural story. There is huge government intervention in terms of distribution portfolio or discoms health. Third, the power capex has remained strong, 2,800 billion kind of capex, which is allocated across power sector for FY23, will translate into at least 15% disbursement growth across power financiers. So a lot of positives there. There have been significant asset resolutions that have happened for these companies. And as you rightly pointed out, the valuations have remained attractive, although these companies have posted best of the ROEs. So given the fact that next 3 to 5 year power story remains strong, I think power financiers will continue to remain in their healthy bit and we would see more of growth coming from the renewable side with the new focus, as you rightly pointed out, IRIDA, which listed, has seen more than 100% price increase already. So I think there's a lot of government push and initiatives that is also sort of supportive of these valuation re-rating that we've seen.
Shweta, thanks so much for joining in and painting a clearer picture as to how things stand when it comes to the entire NBFC pocket.